Hi ladies and gentlemen, George here, and I'm going to bring to you another video with respect to tax knowledge. A little disclaimer before I begin: I'm not an accountant or a CPA. I am not a financial advisor, and this video is simply for your knowledge, and you should do your own research after watching this video. It's meant to inspire you to encourage you to do your own tax return and do the proper research to get it done properly. And what I'd like to present to you today is a video on what can happen with selling personal items. So can you be taxed on the sale of your personal items? And when I ask that question, the first thing that comes to my mind are garage sales. Now, with garage sales, you have to be a bit careful because some folks overdo it. However, in most municipalities across Canada, there are bylaws where you cannot hold more than 2 garage sales. You need a license. You pay $50 to City Hall before you can put your items up for sale. Now, what do I mean by some folks overdo it? Well, by that, what I mean is that when you conduct too many garage sales and you are doing this with systematically and frequently, then that becomes a taxable activity. That may become a taxable activity in the eyes of the CRA, and they may tax you as a business. And there's a difference between selling a few items, personal items on eBay, so you can get recuperate some of your value, so can you buy new material, as opposed to systematically selling that stuff. So that's probably the subject of another video that I've already did, where I talk about with Bitcoin and how it can be a business activity as opposed to capital gains and losses. So that's what you have to be aware of. The other thing is that the CRA splits your assets into two types of personal property. There is personal items like clothes, non-collectible books, bikes, kitchenware, perhaps even furniture, as long as it's not antique furniture, and like that. Now, there's also listed personal property that has a different tax treatment, and that is print, etching, drawings, painting, sculpture, or other similar work of art. And the thing with these types of assets is they can appreciate in value. Jewelry is another item that falls under the category of listed personal property. And the thing that comes to mind is this fellow on YouTube called Chax NYC, and he's a fellow that came from Azerbaijan. And at one point or another, I was watching one of his videos, and he said, you know what? He's a very strong proponent of gold, and he said something that was really profound. He was wearing a piece of jewelry around his neck, and he's saying, you know what? I bought this for $1,000. Now it's worth $2,000. It appreciated in value. Although I don't exactly agree with his position wholeheartly. He is a fellow that came from Azerbaijan with nothing in his pockets, immigrated to the United States, and made a multi-million-dollar business. So what he said about gold is worth listening to. Now, the other thing that I want to briefly mention about gold is in Canada, we're lucky in the sense that we can buy gold reserves directly from our Canadian Mint, Royal Mint. So the investment exactly is, again, I'm not pushing it, but and it's not an NFT. However, let's see where I can find this thing. Watch list. It is gold reserves, and you can buy them from here. MNT, Mike Norman Tango, Mike November Tango, Royal Canadian Mint. Gold reserves, so it's like a certificate, and you don't physically have to hold the gold, and you don't have to worry about it getting stolen. Rare folios, manuscripts, and rare books. Now, if you watch Pawn Stars, you'll see that or watched Pawn Stars rather, I don't watch it anymore except on YouTube. You'll see that the owner of that pawn shop in the United States, he was very keen on rare books, and in fact, one of his friends was a rare book collector. And that's another item that can appreciate in value exponentially over time. So you can end up buying a book for a couple of dollars, and 50 years later, it's worth a couple of million. I was really sorry at one point or another time when as a kid, I bought Curious George books, and my mother, God rest her soul, inadvertently threw them out because I've outgrown them. And now those original books are worth a pretty penny. Stamps and coins, and that's another listed personal property. As you can see, these are items that can potentially become luxury items and appreciate over time. Right, so let's go on to the other slide, to the next slide. Selling your personal property costs the proceeds in sale. So there's special rules with respect to listed personal property and personal use property. If the cost is less than $1,000, then CRA assumes that the cost was $1,000. And if the sale price is less than $1,000, then the sales price is considered $1,000. So what if you have a transaction less than 1,000? It's a wash. It's a zero gain, not taxable. So assume you bought a coat for $250, and a year or two later, you hardly used it, and inflation rate and whatnot. Well, inflation rate would not factor in this case because I'm saying you sold it for $125. So it's a wash sale. 1,000 minus 1,000 is nil. Can you claim losses on personal property? No, because in this case, the depreciation between $250 and $125, I'm just taking a couple of numbers for the sake of an example, that's assumed to be a personal loss. Okay. So assume you bought a desk for $900 and sold it a year or two later for $1,200. The transaction is recorded as $1,200 less $1,000. So your cost of $900 is bumped to $1,000 as per the CRA rules for a gain of only $200. And of that, in Canada, our capital gains is only taxable at 50%. So you would only have to report on your income tax return through Schedule 3 $100. Selling listed personal property, cost and proceeds of sale. So you purchased a 24K ring, gold ring, for $1,800 in 2011. Today you're given an offer of $4,500. Since you have something better to buy, you accepted the offer. Your gain will be $4,500 less $1,800 and taxable at 50%. Second example of a listed personal property, you have a stamp collection that you purchased at $900 and sold it for $1,800 to a collector or another collector. So your gain will be $1,800 minus $1,000. And suppose you bought a diamond-studded watch for $24,000 and had to pawn it in 6 months later for $19,000. You will have a loss of $19,000 minus $2,400, which is $5,000, $2,500 taxable, which you can use against other listed personal property gains. You cannot use it against the capital gains of stocks and other securities, but you can use it against other listed personal property. And you can carry that loss back 3 years or forward 7 years. So the main difference between listed personal property and personal use property is that for listed personal property, they do take into consideration the losses, and you can use them against again, apply them against capital gains of similar listed personal property only. All right, let's go on to the next slide. Now, the next slide, the next thing that I'd like to talk to you about is foreign currency and foreign exchange losses. So let's say you're planning to go to Florida to show off your newly acquired jewelry, and you put some U.S. dollars aside in a bank account, and can any capital gain arise from that transaction? And basically, the simple answer is yes, provided you make a $200, your gain exceeds $200, so $201 and up. At that point, again, you have a foreign currency exchange gain, which needs to be reported on your return. So these are the little known capital gains transactions that people may overlook, and we should know about them and be extra careful to report them. So here's my example of a foreign currency capital gain or loss. Joe saved US dollars for a vacation in Florida. Over the years, he accumulated 3,500 US dollars at a cost of $1 equals $1.25. Now he can convert his US funds to Canadian at $1. $1 equals $1.40 Canadian. So you can see the US dollar appreciated. Again, this is numbers for the sake of an example, okay? So the US dollar appreciated in value vis-a-vis what the Canadian dollar is worth. He will have a capital gain to report. Will he have a capital gain to report? Where you can do further research on this matter is Interpretation Bulletin 95R, which has been archived. The interpretation bulletins have been replaced by income tax folios by the conservative government under the then Prime Minister Mr. Harper. So the total proceeds in this case, if we were to convert the $3,500 to Canadian, would be $4,900, and the purchase price of the U.S. funds was $4,375. I calculated the average foreign exchange rate that they accumulated over time. So 4,900 minus 43.75 equals $525 to report as a capital gain. Taxable will be half of that. That's pretty much it with foreign exchange. So with that done, let's switch to UFile and see how we would enter such transactions in UFile. Okay, so for this example, we have Miss Jane Smith, that is a resident of Alberta. Why would anybody in their right mind forget Alberta? It's a beautiful province. And we have a fictitious address. Don't forget to mention that your province or territory is Alberta. Okay. So that's the identification page. The CRA questions we have to answer with respect to language, whether we have property with a cost over $100,000. You want to remind the CRA that you're not a diplomat of a foreign country. Register for the elections, of course. And as a resident of Alberta, for the climate action incentive, you need to let them know if you reside in any of these jurisdictions: Calgary, Edmonton, Lethbridge, outside of Census Metropolitan Area, CMA. And I picked Lethbridge in this case. Shout out to everybody that's in Lethbridge. I'm sure it's a very beautiful town, city. And for the sake of this example, I did not opt into the email notifications, but I believe this year they will not be sending any paper. The CRA will not be sending any paper notice of assessment, so it would be a good thing to sign up for this account. And for the interview setup, let's get right to the interview setup. What I picked was a bit of interest, capital gains, medical and RSP, other deductions, and in terms of income, I have a little bit of a T4, and social assistance and workers' compensation fall in the same category. So let's take a look at the little T4 here. That's straightforward data entry. Well, I did not put a T4. I put only workers' compensation of $13,800, and then I have a gold chain, which is listed a listed personal property. So here I bought it. I sold it for $2,400, and I actually bought it for $800. And a wedding dress, which could be sold. So the wedding dress, though, is a listed use property. Sold it for $1,200. Originally bought it for $900. Don't call me cheap. It's just an example, folks. All right, so let's go to next, and let's click on the review tab. This is the 2021 version of the software, by the way. There you go. Now, there's one major difference on the Alberta return this year, and I'll let you know what it's all about. Okay, so here, under tax return, we see that the tax return was generated with no bad diagnostics or error messages, so we can consult a return. And what we want to consult in this case is how those transactions were reported on Schedule 3. And you'll see that there are two different categories. There it is. So right here, let's see if we can maximize that so we can see the, oh wow, that's large. Okay, so qualified small business and qualified farm is nothing that we declared here, but we did declare the wedding dress, which is personal use property right here. This is the purchase date, $1,200 minus $1,000, so the cost is bumped up for a gain of $200, and then the gold chain, so it was a disposition for $1,200, and the cost is bumped up to $1,000 for a capital gain of $1,400, combined total of $1,600, and then half of that is taxable on your return, and that $800 from Schedule 3, line 22, is ultimately declared on line 127 of your return as taxable income. Ultimately, since this taxpayer did not have a taxable income, and their income is below $20,000, they get a free return from UFile, plus you don't pay any taxes. Now, I did mention a major difference on the tax return for Alberta. So in 2020, there was a refundable carbon tax credit. And this year, what the federal government will do is they will take that credit and pay it to you quarterly. You can find more information on the CRA website about the carbon tax credit, or climate action incentive, I believe they call it. So I hope you found this video informative and worth your time. Thank you for subscribing, and I wish you a happy tax season. May all your returns be happy, and enjoy the winter while it lasts. One and all from across Canada. Take care, everyone. Have a great day.